This is how I ended up on a negative 1.5 RR week, which I lost negative 1 RR here. A 0 point, I'm pretty sure this, they could say a somewhat of a negative 2 RR week because I lost way more than initial here. I lost some over here as well. So now I think pretty sure over here I lost around 1.2 RR and eventually lost like 6.7 RR, something like that. Like 0.6.7 RR, which is basically 2 RR this week. But we could have made it all back on this Thursday trade, which we did take this trade, by the way, keep that in mind. We did execute this trade, but we were too greedy and we never partial. But there's definitely a great lesson out of all of them. But there's definitely a very, 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 great lesson from this week. The Thursday trade especially, and I will tell you guys why and how did I get greedy and how can we solve that greedy problem. Because, you know, I'll tell you guys about that, don't worry. But let's get straight into it. Straight away, our high to adrenaline liquidity throughout the whole week was just bullish here. I was just bullish throughout the whole week. First of all, some people said like, oh yeah, I was bullish on Monday. I was actually bearish, which I faced a loss. And that's why our boss on Monday was wrong. He was supposed to be bullish because last week, I forgot I checked that last week had a S&P divergence with the weekly CRT and weekly SMT right over here. So you had a weekly SMT IRL to ERL, right? Weekly, CRT to the upside as well. On this candle had a before this weekly candle ended, it gave a model one confirmation to this candle. So we had a 4-hour model one confirmation to that candle. As well, we had a SMT with this other, weekly candle before we broke through to the downside. So on Monday, we were meant to be bullish, but we were bearish. And it's definitely a great lesson on Monday trade. But if we would just go bullish throughout the whole week, we would have had only one setup, which would have been the 2.6 hour win. Everything else would have been no setups there. Now, our higher time bias was overall, my Monday had a shorting bias here because I did not see the S&P divergence, which is that's a great lesson throughout this whole week. Very, very great lesson. On Monday, I was looking to short it down. So I thought, we're in premium. We had a weekly daily series to the downside. We had all of that, but I forgot to check the correlated pair, which the correlated pair had a S&P divergence. So it did not make sense for the market to go anywhere lower here. We're looking to long it up. Although the market did go up, did go down there, but guess what? If when it went down there, we never had opportunity to long it up, so we never got stopped out. But yes, you could say, probably, well, you're down negative 2 RR, so you definitely did lose. But those trades I executed were not my trades, meaning they're not in my rule. They were just lessonable trades, so not probability losses. As you guys know, only time you actually want to accept a loss is when it's probability. In this case, to me, these two trades were not probability. This right over here was a probability win, which we messed up on. We could have been up on a week with a pretty sure 1 RR, but we fumbled that. And I will tell you guys about that. That's the Thursday trade is the most greatest trade ever, right? Because the lesson out of it. But on Monday, we're shorting here. Our boss was wrong because I did not see the weekly S&P CRT to the upside. So, that's what led me to having this bearish, that's what led me to having a loss here because I was supposed to be bullish here. If you go on Monday here as well, this is Monday. This is when it started. Right on Monday, I'm pretty sure market went lower at 17 o'clock, went below this other day's candles low. So right on Monday, we already had an SMT. So this low is protected already. So since we had that, I was still looking for shorts because I was okay, it's a weekly time frame. I usually look for SMT on the daily and the 4-hour time frame, but that was proven to be wrong. And I'm meant to be looking for it in the 4-hour daily and the weekly SMTs, right? So I went against the higher time frame bias here, and I took a short right over here. You can see, took a short because during that specific time, I had an SMT divergence, and during this time, I was okay. The SMT happened 2 different times, so did I make a mistake there? And eventually checked out, no, I did not make a mistake because SMT can't happen at the same time. It does happen, the same 4-hour candle could happen, but it can't be, it always will not always be perfect. So it did not happen the same hour. I mean, this one did happen the same hour. I was like, okay, did it supposed to happen at the same time? But that rule, that theory was fucking bullshit. They just had my bias wrong here. Every rule was accepted, but the bias was wrong. So yeah, the lesson of this trade is you can see we enter a resistance block, got SMT divergence. So I was like, okay, we're shorting it down, looks pretty good. It seemed unrealistic. It seemed really unrealistic to me as well. I was like, bro, usually trades like this should not offer this much RR here. I'm wondering, well, you took a 15.5 RR, but sometimes when a trade looks too good, usually gonna fuck you up. But it's not always like that. It's probability based, right? So this trade, the reason we lost here was primarily because our boss was wrong. So the lesson of this trade is during the Saturday or Sunday trades and throughout the week, I should be, and I will be, and I will, and I do, you know, look at other pairs, the correlated pairs like GU and DXY, especially during this Saturday starting session or the weekends. Look at those charts, see if there's a higher time frame S&P divergence on the daily or weekly that could affect our potential bias here. So that was the lesson. The lesson is based primarily to look at the higher time frame, daily, weekly, and the 4-hour. See if there's S&P divergence with the correlated pair because as I said, S&P divergence affects my bias. So the reason we lost this trade was because I did not look at the correlated pair and did not see the weekly SMT arrow to arrow as well the weekly SMT CRT to the upside. I did not see that, so that led me to taking this loss. So from now on forward, what I will do is I will always, during the weekends and throughout the week, I will look at the correlated pair. Okay, look at the daily and the weekly. Okay, is there any S&P divergence here? Is there anything that is going to prevent from this high or this low getting souped? So the lesson is I will from now on forward look at the weekends and the weekdays throughout the week. Look at the higher time from the daily or the weekly. Look for S&P divergence that could potentially help us with our bias and help us read the market efficiency better, and I hope help us avoid losses because S&P divergence does affect our bias here. Keep that in mind. So yeah, that's the lesson of that trade. And on Tuesday we didn't trade because the day before for press conference, you can see Tuesday was fucking tweaking. If you were a Tuesday on Tuesday, I found my bias being bullish here. So on Tuesday, I was looking for longs, and I did definitely had a long potential. You can see it over here, the 5:45 a.m. kind of had a long, but it happened at the wrong time. But he never really delivered here. He never delivered. Market eventually stooped it out. So you guys know our rules will usually cause the action to happen, and during that time, the movement didn't. There was not the actual move that was going to happen. So market really never offered, respected it overall. Because we're this one, since we're trading on Monday and Thursday, Monday through Wednesday, we're going to target the higher time. We're trying to target the higher time so we can get more RR. And Thursday and Friday, we're looking to go for more risk take profit because the weekly candle has to close at a fair price. So this one overall did not deliver at all and eventually failed. You can see his stop loss. So that's why we're not trading. That's why we gotta wait for our route to be there. When it's the perfect time to trade, the perfect time to trade is always when our rules are there. When our rules are getting respected, that is the perfect time to execute a trade. And another loss we happened was on Wednesday in the FOMC. We're wondering, well, whoa. So did this follow my rule? This one did not follow my rule. I fucking traded the macro, as you guys know. I do not know why I'm trading the macro. I think I'm having I'm having a problem where it's already fixed now, but I had a problem where I wanted to be ICT. I wanted to act like I'm ICT. I wanted to make some new theory, which the theory does work. Keep that in mind. Theory does definitely work, but the 1 minute time frame does not fit my way of trading, as well as I'm not ICT. Everybody's their own self. I can't act like somebody else. I'm not that guy. I'm my own self. It doesn't suit me. It makes me force trades because 840, 950, 1010, and 1050 to 1110 will always be there. Since they're always gonna be there, as you guys know, high probability setups does not happen every single time. So it does not happen every single time. And the 950 or 1050 will always offer a setup, which is they're the macro, right? So I just try to make some bullshit theory. And the theory does definitely work. I back said it definitely does work. I had a 30-hour trade with it. But the thing is, it doesn't suit the way I trade. It doesn't suit me. So it doesn't suit me. I'm not going to, trade it because it doesn't suit me. I'm not good at 1 minute time frame, especially with the 1 minute time frame. There's a lot of spreads. There's a lot of, in the 1 minute time frame, you're gonna have tighter stop loss, so you're gonna increase your loss size. So as well, you're gonna have higher spread, so you're gonna lose way more than initially supposed to lose. As well as it happens every single day, it's more. The 1 minute time frame, there's so much that happens in a 1 minute time frame. Overall, does not even suit me. So now from this trade, our lesson is, and people wondering, well, your setup was here, the Model 1's here, why did you not take it? The Model 1's not there because the 5 a.m. the price didn't happen at the right time, which is between 6 a.m. and 10:30 a.m. As well, the Model 1 was not the right Model 1, and they both must be there. In this case, you can see this setup that happened to the upside, the time was in there, neither was the Model 1 was in there, right? So you can see overall they both did not deliver. Whenever our rules there, it was just when we're very confident this will be the actual move to deliver, which in this case, you can see it over here, did not deliver at all. And just keep, why am I not saying this one? All the people were thinking, well, one could still go up high from here. What do you mean did not deliver? Because keep in mind, this is Tuesday and Wednesday. These 2 days are very important for the higher time frame draw on liquidity. That means you can literally swing these trades on from Monday to Wednesday. But we're doing, well, this one did not deliver. This one still went down. This one did deliver. How come? Because Thursday and Friday. Thursday and Friday markets close at a fair price. So overall, this one did deliver because Thursday and Friday we go for more risk take profit. We're not going for unrisk take profit. So this one overall did deliver, and this one did not, because this one we could have gone for the higher time frame, which overall did not deliver. Right? You can see the differences here. So the lesson on Wednesday, we lost I'm pretty sure 0.74%, which yeah, that's how much we lost, because the spread, I said, spread made me lose way more. The range was very fucking off because of the spread. As I said, we were having a side of stop loss, so we lost way more initially. And the lesson of the trade is we're not gonna trade macro anymore. It does not suit me. Make me force trades. You're gonna be there every day, and the high probability setup is not there every single day. My high probability setups are there once a week, two times a week, or not even a week, right? That's what led me to having this loss. I'm not gonna trade macro anymore. I'm not a guy who trades like to trade a 1 minute time frame. It's too much going on there. It's not suit my style. The whole reason I go in drawdowns because I make fucking new bullshit theories, which I'm saying, as I said, it's time to move forward, which will not happen again, which did not happen again the next trading day. We move forward, but when we encounter a new problem, when we face a lot of problem on Thursday, we're looking for longs here. As I said, the whole week we're looking for longs. On Thursday, still had a SMT, weekly SMT IRL to ERL, weekly CRT SMT to the upside, as well as CRT was still getting respected. So we're still looking for that long. In a daily time frame, before this daily candle closed, we had a SMT there, as well as had a daily CRT as well. We had, we're in discount the daily range. We're going from an SMT ERL to IRL, so we had it on a daily time frame. If we go to the 4-hour time frame for the market narrative as context, we had a New York profile 1 AM accumulation, 5 AM mid pitch, and 9 AM expansion. 9 AM expansion to the downside, but you can see the 5 AM overall didn't meet our drawn liquidity, so we're fine. We had over here a daily range as well. Market slipped at a high, slipped at a low, stable high, and eventually made a stable low. We're in discounts, so you want to buy. Eventually, the daily range was right here. Right? You can see the daily range was right over here. So I was like, okay, we're good. We have the context here. We relatively still did have a bullish, bullish order flow during this time. Eventually, now for the market to go back in a bullish order flow, it needs to go above this high right over here for a bullish order flow. But during that time, we did have a bullish order flow because the last high that had SMT, and it got a closure above. You can see market broke above the highs, so the order flow is still there in our side during that specific time. But right now, currently no longer with us. But if you go to a lower time frame, we got SMT over here. Well, so we're looking for our number 1 right over here. Model 1 happened at the right time between 6 a.m. to 10:30 a.m. Eventually, we had the right Model 1, which was this candle right over here, and we could tapped it. So the first time I was not looking to execute a trade at all unless it had the threshold. But I eventually found, okay, market did a big impulsive move to the upside. If the market retraces all the way back to the threshold, it wouldn't make sense. How would it not make sense? If the market did push up all over here, it doesn't make sense for the market to go all down here and go up high. It doesn't really make sense. That's too much money going away in their way. So they like to go like, okay, go over here, then go up higher, right? Without doing all down here just to tap it back in. Logically, it wouldn't make sense for the market to do all the down dating since the market is controlled, and this algorithm, which it doesn't really make sense for the market to go all the way back to the threshold after doing a big ass impulse to the upside. If it does to go to the threshold, it's probably gonna stop us out. So it wouldn't make sense for the market to go all the way back to the threshold and go up higher. Because this is in case I was trying to enter on a threshold, but I eventually found out, okay, this candle, we're meant to enter the threshold, but market, since the market did a big, push to the upside, big impulse to the upside, it doesn't make sense to enter the threshold anymore. We're gonna enter the model 1, but we're gonna put our stop loss below the body of the model 1. Why? Or above the body. Why? Because since it does not make sense for the market to enter on the threshold, since it doesn't make sense for the market to go to the threshold, we're safe to put it on the, on the body. Body telling the story, wick doing the damage. So we're relatively safe. But it was definitely going to loss, by the way. Keep that in mind. So we had an entry here. Boom. Stop loss. Take profit 1. In this case, people wondering, well, how did you get greedy here, T? I had another take profit, which is like, I had another take P, which is right over here, which never got met. And if market fully reversed. And so on this trade, we didn't make nothing, but we could have definitely made everything back here. Am I mad about, oh yeah, I didn't make my fucking profit on the week. I'm down in a week. No, not at all. This exchange was such a beautiful trade because I could have profited out of this high I could have profited out of this candle to the upside and still made the same amount of money. But I didn't do it because I was like, okay, I do not want my mind to distract me with profits because I knew I made a mistake here. I knew there's a beautiful lesson because I took a trade like this. I was like, oh shit. It's a new way of entering the model 1. There's a big lesson out of this because if I were to get out here, I wouldn't really give a fuck about me entering here. I wouldn't give a fuck about the lesson. Profits in the mind. Am I that type of person? No, but I do not want it to happen. So I don't want it to happen. I'm gonna let this shit run. I'm gonna let this shit run. I was like, okay, this is definitely gonna I see this going to loss, very very high likely. I'm not lost. I mean break even. And it did when go on a break even and it went to a loss. But there was 4 fucking very, very viable lessons from this trade, which I would exchange me losing $2,000 for. This is I'm losing nothing. I guess I'm down a week. I'm down like what, probably like a 2,000, like 1,100 or something like that. But I will exchange $5,000 just for this lesson. Because this lesson overall helps on a longer term basis. Now this lesson helped my Thursday and Friday trading rules. Because in Thursday and Friday, I just set, a expectation to just go for take profit. But what's a risk to take profit? Where? This, there, this, that, where? Where's the risk to take profit? Where should I actually go to? Which this trade told me where to actually go to. This is why I said I would exchange me losing 5,000. Possibly even 10,000. I don't give a fuck. I will change, I'll change anything. I have money. I have fucking money in crypto. I'm making a big bag out of this fucking Ethereum, Dolan. I'm making a big bag out of this shit. I don't give a fuck about losing 5,000, 10,000. I could lose if this lesson were to cost me 100,000. I'll pay the 100,000. I'm wondering, well, I could have cashed that 100,000. Why didn't you do that shit? The lesson is more important than the profit. When you become rich, it's not about the asset you have, it's about you. What you become is what's important when you become a millionaire, whatever. And we're in the track of that, becoming that as well, and we'll definitely achieve that. So the lesson of this trade was a break-even trade, which I'm pretty sure I lost like $10, which is nothing, right? So the lesson of this trade is one thing, and one thing only. The lesson, no, not one thing only. There's multiple things. The lessons are when I'm supposed to enter on the threshold, but the market did a big impulsive move to the upside or downside, and it doesn't logically make sense for the market to go all the way back down or up to the threshold, then go lower. If the market does not make sense to do that, what we're going to be doing, we are going to be entering on the model on itself and put our stop loss on the body or below the body or on the we're gonna put our stop loss above or below the mod one body, because wick doing the damage, body telling the story. Since it does not make sense for the market to go back all the way to the threshold, that stop loss would be a little safer and giving us more RR, giving us a higher moderate to high risk reward ratio. And I'll probably wondering, well, don't make some bullshit theory. Don't make some bullshit theory. I'm not gonna make bullshit theory. I do have this is all backed by proof, because people wondering, well, how did you know this, T? How did you know this? By fucking paying attention and going back in a chart. Because I can give you an example of this happening again. Like it was last week. Right over here. Where was last week? I want to say Friday last week. Was it Friday last week? It's not Friday. No, not last week, the week before that. The week before. Right around here. Oh, neither that. Neither was it that. It was somewhere right over here. Oh, and then, whoa, how the fuck did you know this specific candle? Come on, man. You guys are in a CRT inner circle traders world, man. That guy. So this one, market, you can see this is the number one. Market did a big impulse to the downside. It doesn't make sense for the market to go all the way back up to the threshold and go lower. Yes, in this case, we're supposed to enter the threshold because the market is fucking, the candle is big, fat. And as you guys know, RR is better than anything. We would, as I say, we're entering over here. This is supposed to be the actual entry supposed to enter. Market doesn't tap it. We're good. We don't give a fuck. You know why? Because RR beats anything. And it's, sometimes it may not even tap our entry, just go away. Doesn't matter. As we know, the longer term basis, it will help us to give us more RR, make us be profit on longer term basis. So in this case, when the market did a big impulse to the downside, it doesn't make sense for the market to go back to the threshold. So what you're gonna do, enter on the body itself, or the model one itself, and put your stop loss right above the body. Wick doing the damage, body telling a story, enter there, and market goes lower here to draw on liquidity, and that's what happens. I'm pretty sure there was another lesson like this. It was a little while ago. It was another lesson like this trade, but that lesson, I do not have the specific price point, but I did see this happening a little backward. I did see this happening a little days before that. I'm pretty sure, I think it should be somewhere around here. It should be behind this, but I'm not sure the specific price of it, but it did definitely happen, back in the time. So it happened multiple times here. So we have proof, we have evidence. How do we build confidence? By having evidence. If you don't have confidence, you have to build evidence for that theory to work out, or whatever you're doing to be, to know, okay, I'm gonna keep executing because I have evidence. I don't need to have confidence. I personally don't need to have confidence because I have evidence. So that's the number one lesson out of that. A second lesson is, as I said, the Thursday and Friday rule I had was, I said, to go for a take profit. I didn't know which specific realistic take profit to go for. I said, okay, the nearest daily objective, but since it's Thursday and Friday, it goes in a fair price, it needs to be the most realistic take profit, which is just the 4-hour CRT highs and 4-hour CRT lows, are the hourly CRT highs and CRT lows. When do we do trade the hourly CRT? When it's a near continuation or a near cruiser profile 2. Otherwise, using the 4-hour CRT, which is the near continuation, as well as in the near cruiser profile 1. In this case, with near cruiser profile 1, just using this 4-hour CRT high as a take first and final take profit. Which, as I said, this one I didn't make anything because I was trying to go to the second take profit, which I thought it would have gone to, which we never went to. And eventually, market stop us out, break even. And other lesson is, that's the second lesson. The lesson is, on Thursday and Friday, I will only go for the 4-hour CRT or the hour CRT range that I'm supposed to be going for. So if there's a 4-hour CRT range, I'm gonna go there only. If there's an hour CRT range, I'm gonna go there only. And if there's, let's just say I'm using a 4-hour CRT range to enter on the different 4-hour CRT range, which is bigger than that 4-hour CRT range, I'll go for that bigger one. In this case, what I mean by that is in this case right over here, right? On Friday, the perfect example. On Friday, we had a bigger range, but we're using the smaller range to go to the bigger range. So our main take profit is going to be the bigger range because, it is in the 4-hour time frame. It is primarily in the 4-hour and hourly time frame. And it's, saying 4-hour time frame right over here range. So our primary take profit is going to be the 50% mark because it's Friday, it's closing fair price. 50% mark of this 4-hour CRT, our last and final take profit, but we're gonna use a smaller range to go execute to the bigger range here, which overall, that's what I mean. So on Thursday and Friday, I will only head to the CRT has to low of the 4-hour/1 hour because now this helps us avoid partials. This helps us make the whole. So if we're gonna make the whole pie, right? And the next lesson is I am not greedy. What my take profit gets say, I will partial and break even no matter where the market is. Is it if the market gets to up here and if I got to partial and the market's all the way down here, I'm gonna partial here. I don't care. Right when my take profit gets met, I will not be greedy. I will not be greedy. I'm not trying to make the whole. I'm not gonna wait for the market to go all the back up here and try to partial again. Right when my take profit gets say, no matter where the market is, I will partial and break even because making something is better than making nothing. Having motion is better than having no motion. I'd rather take a piece of the pie, not the whole pie. Because when you take the whole pie, you're greedy, and you're gonna fuck up. And how you guys know, when you guys eat so much pie, you get sugary, you have diabetes, so you have consequences. So taking a piece is better than taking nothing. Having something is better than taking nothing. And that's the lesson of that trade. And the last lesson is of this specific trade would be I have to think my mind here. And I think that's enough for that. That's a lesson. And yes. I just found it, which is the last lesson is why and how did I become greedy on this? Why I could literally tell you guys how I became greedy on the trade when I'm not supposed to be greedy. How did I become greedy on this trade? Because I risked 1% and I only needed a little bit more percentage gain for me to pass the account. I needed a little bit more percentage gain for me to pass the account. Like, okay, let this market go up a little higher, then I'm gonna get out of the trade, because I need a little bit more to pass the account. I don't have to wait. No, none of 2 trades to fucking pass the account. Just let's just go a little higher, which that was a problem. That made me greedy, and that is why I then impartial. I didn't get out of the trade. But I was still I'm still happy with the lesson. But the other lesson is I will start risking 2% because I only need a little bit more to pass the account. And which I did fucking, that's what made me pass the account. Like, it got very close to passing the account. But I didn't. Why? Because I risked 1%. I need a little bit more. So I tried to force the market to keep on going, which I hoped, which you should never hope. Right when take profit gets met, partially break even, nothing else. And the reason why I didn't partial here, first of all, greedy. Second of all, I just needed a little bit more to pass the account, which that is what led me to making nothing. And the lesson is, from now on forward, every trade I take on challenges on phase 1, phase 2, yes, phase 2 as well, I will be risking 2%. Always risking 2% because now that helps you avoid trying to, go for an hourly take profit. This helps me avoid, going for the right take profit and not being that greedy because I'm risking the 12th, twice the size. And this will help me, pass the account faster without me being concerned of me. What if I need a little bit more to pass the account? And you should never do that. You should always trade the process. You should always trade the chart and not your data and not your feelings. But that's the problem I had. As you guys know, humans makes errors and mistakes. So the lesson is to trade the chart and the data, not my feelings, trade the data, and not my P&L. And that's what I did. And we faced the consequences. But the great lesson out of the trade is to every trade on challenges, every single trade, I don't care if I blow that shit up. I'm going to be risking 2% on challenges and 1% live / when it counts. And that's going to be on that. And that's the last final lesson of that trade. And on Friday, there was no setups here. The reason there was no setups on Friday here was primarily because market never souped out the hourly range or the 4-hour range low. Each market just went up higher and then just went back down to close of the weekly price range. Market went up all the way here just to close at a fair price. You can see market over on Friday, we still had our bullish basket. We're looking for a Friday retracement because market did a big dump to the downside. It wouldn't make sense for the market to go lower because the weekly objective already got met. which to me, I was looking to long it up, but market never give opportunity here, which my take profit is right over here, which the drunk just got met. I was like, okay, I'm done for the day. My take profit got met. I'm done. Market never offered me entry. It is what it is. But yeah, that was the lesson on Friday. Lesson, nothing much happened. Market just a market recap. I did not try to make my money back on Friday because although okay, I was down a week. This could have made all my money back. I'm not going to be coming in Friday trying to make everything back. No, this is we're in a professional state. We're in a professional industry. We're not fucking gamblers. We don't do this shit. Just we don't do this shit. You know what I'm saying, we don't do that shit. We don't fucking come in Friday trying to make everything back. Fridays are literally one of the worst days to trade. So what the fuck is trying to make everything back on a fucking Friday when it's the worst day to make everything back? Right? It doesn't make sense. And we should never do that as well. But yeah, this is a lesson of the week. Very viable. Thank you for watching. Make sure you guys like, comment, share, and join the discussion down below. You know, we got Pay Signals groups and we have evidence on Pay Signals group. Make sure you guys join that. And yeah, very beautiful lesson. I love it. I love it. I love the week. I would exchange anything for these lessons. Although, you know, but wondering, well, yeah, you said you could have made this money, this, that on the 30 trade. I'm happy and more happy. If the market just say want to go up, I would be way more happy for the market to go back down and stop me out. Because when I go back down, I'm searching for the answers. When I'm going up, my mind tends to distract you with profits, which should never let you happen. Which doesn't let me happen, but I don't want that to happen. So you guys know, a winning trade is not excite us, a losing trade is not phase us, a missing trade is not concern us. And it's all part of the process. We're cold, calm, losing streak, when winning streak. When we win, we feel nothing. When we lose, I feel nothing. When I'm right, I feel nothing. When I'm wrong, I feel nothing. Nothing. Process, strictly business. We use our losses and wins for areas of improvements. If we make this mistake once, we never make the same mistake again. I never made the same mistake. I focus on the process, I focus on the process, not the outcome. I focus on the long term, not the short term, and it's all part of the process. Beautiful fucking week. I love this week. Literally, now this tells me, okay, simplicity on the Wednesday trade. It says, okay, I have to be simplicity is key. I don't want to add some fucking very complicated rules. Simplicity is key. That's why we don't trade the macro, because simplicity is key. The 4 hour to 15 minute and the hour to 5 minute is very, it's a higher time frame as well as very simple. But I have it the 1 minute time frame being so much candles. Simplicity is key. Do not fucking do too much, because if you do that too much, you're gonna fucking fuck up your brain. So yeah, very valuable week. Thank you for watching. I'll see you guys later. Peace out.